Hey everybody, believe it or not, it's Dan again. And in this session, we're going to talk about YNSURANCE. And I want to be really direct with you from the beginning. What you're about to learn isn't just about insurance. It's literally a wealth strategy conversation. It's a tax structure built into this system, one of the most powerful things you'll ever be able to offer an accredited investor. Ooh. Big shoes to fill. That's a big one. But it's really true. So let's start where most people are. See, most clients still think of life insurance as something that only matters when somebody dies. They think of it as a cost, something passive, something sitting in the corner, sitting in the safe, waiting for somebody to exit the planet. Well, that kind of framing is the first thing that we need to replace, if you will. See, YNSURANCE uses life insurance during your life. Now, many of you have already experienced and been selling life insurance in a way that you do utilize the cash value. It's not just about after death. The policy becomes a capital account, a foundation, if you will, a place to build the cash value that can be accessed through policy loans and then put to work. And we like to put it to work fairly quickly. Now, that work for the YNSURANCE is the YLDZ token. And again, this is for accredited investors. Now, keep in mind, we have the insurance strategy that we can use with Stretch for those who aren't accredited. So here's where the strategy goes from just average to literally extraordinary. You see, the YLDZ tokens built around a compute lease energy revenue pool. And sounds like a mouthful, but what it does is when an investor puts capital or invests into the YLDZ token, that capital is deployed into qualifying compute, which is being leased, and also the energy to run that compute. ASIC miners, GPU clusters, high performance service. And under current IRS rules, qualifying compute receive 80% first year bonus depreciation. What's that mean for your client? It means on $100,000 purchased in the token, we would get an $80,000 deduction year one. And at a 37% tax bracket, federal and state, that's about $29,000 in tax savings. Money that would have normally gone to the IRS stays in their pocket, stays on their balance sheet instead of being sent away. On top of that, the token produces Bitcoin every month. So you have the depreciation at kind of the entry level, which offsets taxable earnings, but also the distributions come to the investor as return of capital. ROC is kind of the commonly referred to term now. No current tax owed. The Bitcoin simply accumulates. And here's the third layer. This is the one that kind of changes the entire conversation. Instead of eventually selling that Bitcoin, which would trigger a capital gain event, the investor can borrow against it, loan the proceeds, and as you know, just like a life insurance policy, loan proceeds are not taxable. So they get to spend tax-free money during their lifetime. When they pass, what do? We let the life insurance death benefit retire or pay off those loans. It's clean, it's efficient, and it's exactly what the high, ultra wealthy have structured for decades. You've heard of the Rockefeller method or the waterfall method. That's all they do. They live off borrowed money and let the death benefit pay off those loans. Now, here's what makes the annual premium structure so, powerful. Every year the investor pays the premium, we use the policy loan feature to purchase new YLDZ token. Each new token purchase is a fresh depreciation schedule, which means a fresh 80% bonus depreciation deduction in year one and the other 20% in years 2 and 3. 4 years of premiums mean you have 4 separate depreciation cycles. 6 years of premiums means 6 years of separate depreciation cycles, and they're stacking on each other. So obviously we encourage clients to continue paying premiums for as long as they can. If they're working, if they're making money, if they're putting money somewhere, there's no better place for it to start than inside of a policy. And every year you do this, the tax engine just keeps getting better and better. Now, over 3 years, the numbers show a 79.7% cumulative ROI on a $100,000 investment versus probably around 28% for a standard taxable yield investment. That's not marketing language. Now understand, that's just math. That's just the structure. Now let's talk about how you would communicate this. Don't open with the tax deduction. Open with the outcome. Tell them, you can earn Bitcoin every month without paying tax on it. Get a significant tax deduction every year that you put money in, and access that Bitcoin without selling it. And let the life insurance cover the loan when you're gone. When they ask how, then you can explain more detail how the structure works. But lead with the result. Then you can follow up with kind of the mechanics. That's the sequence to really being successful. Your job is not to make this sound too complicated. It gets complicated on its own if you let it. Your job is to make it sound like exactly what it is, the most efficient wealth strategy that they've never seen, never been shown before, with tax advantages. Because when they understand that, they kind of stop hearing life insurance. They start hearing strategy. And that's exactly where you want the conversation to go. Speaking of go, let's go. Let's get this done. You guys could all be out there selling these policies. Even as the YLDZ token and the YLDF1 token are in the works and maybe not out live, we can still get the policies underwritten, issued, premium paid, ready to go as soon as the token hits the street, which isn't far. We'll be just days away after you get your clients underwritten and approved for their policy. All right, that's it for this session. Look forward to talking to you on the next one. See ya.